The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 16th, the magical Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, how about let's have an extraordinary one? Yep, let's have an extraordinary day. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of situations that life is going to toss at us. Now, today, you and I, we're going to go check on the situations, the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but way more important than that, during this next hour, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, we've got you covered. Let those fingers do the walking. You can send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And, of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now we got the Dow trading down 138 points. That's 0.5%. All the indices, with the exception of the Russell 2000, are in the red. The Russell 2000 is up nearly 0.7%, or nearly 11 points. She's trading at 1588. So we got to take a look at that. Spot volatility index up $1. 7.86%. Gold's up 11, silver 40 cents. Light sweet crude up 7.88. That's 14%. Still not above resistance. We'll take a look at what those levels are. We're going to take a look and see what changes are in the market versus when I did filled in for Larry between 9 and 10 o'clock. Of course, I want to hear from you. But there's no questions in the queue just yet. So let's begin. Many of you may not have heard the 9 to 10 o'clock show. So the question is, well, obviously, what are the markets doing? Do we have a change in trend? You know, questions like that out there. So let's go take a look at the markets. And to answer that question out here, we're just simply going to rely upon our TAS daily profiles. In fact, I think I have a cleaner version of this. Let me see. Is this the cleaner version? Yeah. Here's the cleaner version. That way you can just focus on what you need to. And when I say what you need to, there's really, in essence, 3 new pieces of information that you and I have. Those 3 new pieces of information are brand new daily profiles for the ES Mini, left-hand panel of the chart. Next panel is the NQ, but that profile has been in place for several weeks from a daily perspective. But the Dow Equity Futures contract next to it, YM, that has formed a brand new daily profile, as has the Russell 2000. Now, when prices trading in between these profiles, which they are for the ES and NQ, we really just have a consolidation. We have not seen a close below the bottom of a profile inside the ES Mini, well, for quite some time. But that's what's needed. And so the key number to be looking at today is 2972.75. Well, whether it's today, whether it's tomorrow, we're trading at 29.90. What are we trading at? 29.99. The center of its box is 29.99. So in essence, right now, both bulls and bears believe there's fair value within inside this trading range. The trading range being 29.72 to 3,008. It's a bearish structured daily profile in the ES Mini because the center line is closer to the top than it is to the bottom. It says sellers should have the energy to push price down to 29.72, but only a close below that level would suggest that we've got some type of short-term, intermediate-term time frame change in trend out there. If you look at the Russell 2000 on the right-hand side, it too has a bearish structured profile. Day one, in the Russell 2000, a bearish structured profile. Again, bearish in structure because that center is closer to the top of the box. Center's at 1574, top is 1586, bottom is 1552. It's a bearish structured box. There is nothing more bullish than a failed bearish pattern. Well, in this case, that's what we have right now at 1:11 in the afternoon. Prices trading above 1586. You're at 1593. I don't know what the close is, but any close above 1586 for the Russell 2000 is strong like bull. And that ain't no bull out there. So if it ain't no bull, where is the Russell headed to? Well, it completes its consolidation measured move at the 1603 level. We're at 1593. That's 10 points. Should be a breeze out there. Now, the measured move, which is represented by the yellow rectangular boxes, the dashed one shows you the measured move or the approximation of where the measured move would be headed to. When you break through consolidation, your projected price area is equal to or greater than the consolidation. So 1603 is just an initial price target for the Russell 2000. If we look at the daily equity futures contract, take a look at other signals out here. We're just pulling over the daily. This has got Stevie's other tools out here. There is no topping pattern other than just getting back to prior highs, where, in fact, we saw a bit of a struggle with that shooting star, that bearish candle. Now, the nice thing about a shooting star candle is they either work or they don't for the most part. It's one of the few candles that we can say that about. In this case here, we're not seeing it work. Yes, price is not over the high. We're taking a look at the Russell 2000 equity futures contract, 1595.20, the high from Friday. But it ain't working out there. Any close above that says you're headed back into the highs from May 6 of 2019 and maybe even beyond those levels out here. So the Russell 2000, strong, very strong. Right now trading above resistance. That should have been able to act as resistance, and it didn't. So what's that mean about the other contracts that are out here? Well, the NQ, the interesting thing about the NQ, even though it's one of the weak links right now, all it's really done is pulled back to test the top of its consolidation. Let me just expand that chart out here. Here you can see the consolidation, the solid rectangular yellow line separated by the measured move, which is the dash lines out here. And all prices done today, it did it a few days ago, was come back and retest the breakout of the consolidation. Now, granted, this has a bearish structured daily profile as well, with significant resistance being 80.54 to 79.73 out there. That's the top and center of the box. So it's just kind of consolidating sideways out here, but nothing broken. Nothing really broken inside of the NQ. We would have a different story for it. Let's say we'd have a different story with a close below 77.9825. That's the trading session of August 22nd out there. Last time there was a bearish reversal candle. So, and it really lines up in essence with the consolidation pattern inside of the NQ. So in summary out here, no breakdown in the ES. The NQ retesting its breakout level, which is a bullish move. The Russell 2000, strong like bull. And the Dow, just trading within its consolidation. Nothing broken there either. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow up 132, S&P down 10. So during that break, I was trying to answer a question that Tiger's Den about Amazon. And if we take a look at Amazon, because I want to complete the analysis of it, here what we can see, we're just taking a look at the daily, weekly, monthly set of profiles out here. We can see that price right now is trading just back below the top of its daily profile, the daily profile being 1820.97. You don't notice a or a center line because the center line is at the bottom of the box. So that's a strong support level. The weekly shows that price needs to get back above 1853.90. That's the bottom of its box if it's going to move higher. And price is trading with inside the monthly profile. So we know that. So what when we took a look at Amazon, we know about Amazon on a daily time frame. It's all about, it has this formed a bottom. And there's several bottoming patterns that you and I like to take a look at. For example, this thing topped back here on July the 11th with the TD set up 9-count pattern. It was bar number 8. 9 was underneath bar number 8, which Tommy DeMark says that when you see that, that's a pretty important signal of a decline out there, as long as it hasn't traded into bar number 6. But in either event, it identified the top. And then back here on the trading day of August 26, one of our other tools to identify tops and bottoms is the Rhodes Momentum Indicator signal. You began getting that signal on the trading day of August 23rd, but it was really the following day, August 26th, that generated the first element of a bottom or a buy signal, and that was the hammer candle. We talked about the shooting star on the daily time frame. I believe it was for the Russell 2000 equity futures contract. Now, whereas typically you'll see in the shooting star they work right away, which means follow through to the downside, the hammer candle is really best to be bought about halfway into the wick to the bottom of the wick. That's your best reward risk option, especially when it has completed at the end of a pattern or the beginning of a new pattern. Either way, that's how it works out here. That's really what took place over the course of the next couple of days, and then price got above with a gap to the upside, a second bullish candle on August 29th. And price was above Stevie's red line, the oscillator and change line. Gets to wave number 4 a couple of days ago. Basil's taught us that when you get to wave number 4, the market's likely to do something different. Maybe it's a pullback. Well, that pullback is what's going on today, right into Stevie's red line. Now, a close below Stevie's red line would be problematic. That's 1802.60. 1762 and say, okay, you could get back into those lows again, the 1740 area out there. And I say that's a real possibility. The reason it's a possibility is, hey, look, prices underneath the weekly bottom of its box and prices in between the monthly. If we take a look at the weekly and we take a look at the weekly time frame chart, the signal, I would say, is a consolidation pattern between where price broke down at 2033. We can see how that acted as resistance on the move up into July. And the bottom of the consolidation, so to speak, would be its breakout area at 1586.57. So the intermediate term time frame chart right now says be cautious out here with regard to Amazon. And then if we take a look at the monthly time frame chart, it too is saying be cautious. Now, the reason it's saying be cautious is because of its Rhodes momentum indicator top out here. And this would suggest a price move eventually down to 1438 to 950. But right now, you at least have a counter trend rally that is in place inside of Amazon, suggesting higher price. And that is as long as price holds Stevie's red line, and that's at 1802. I don't know what I said before, but hopefully it wasn't 1862, 1802. All righty, let's go to our first caller out here. Let's go speak with Ron in Denver. Ron, thanks for calling. Thanks for holding. How are you?
Thank you, Steve, very much. There's a nice comment about Amazon. But I mentioned last week that I'm in Adobe, ADE.
Yes.
And I just wondered, having a good move this morning, I just wondered what your thoughts were, where resistance might be on a short-term basis.
Yeah, so I like this morning's move. I like today's candle. I like two things about it. So when we talked about this last week, our concern was that price continued to find resistance after forming a Rhodes momentum indicator bottom. It did that with a hammer candle, and that's because price continued to find resistance at Stevie's red line. That number, by the way, Ron, is 279.79. Today we have a second bullish reversal candle confirming that Rhodes momentum indicator bottom, and as long as Adobe closes above 279.79. Let's go see where price might head to. Now, to do that, we're going to go take a look at the daily, weekly, and monthly profiles. So the daily level is where price is trading right now, the bottom of its box, 281.46. We're trading at 281.61. So just a slight piercing above that. You'd like to see another close above you'd like to see a close above 281.46. You'd like to see a second day. Let's say that would be tomorrow. And then this would say that at a minimum, we should see Adobe trade up to 286.84 to 289.54. That happens to be the center and top of its daily profile, which is bearish in structure, suggesting to you and I that Adobe should have trouble getting through that 289.54. If it does, then that would be extremely bullish out there because that is a bearish structured box out here. The weekly doesn't really offer us a whole lot other than resistance is just above at 284.35, and the monthly not really providing you and I with a lot. It provides us with longer-term outlook that maybe what Adobe really wants to do is pull back even further. And we say that because of the Rhodes momentum indicator top out here, and on a monthly basis, price trading below Stevie's green line at 296.42. So to summarize this, Ron, I like today's action in Adobe. Where's it likely to head to? I'm going to go with that 286 to 289 level. I don't know if it's going to do it by the end of this week, which I think is what you were looking for. Yes?
Yeah, thank you very, very much. Yeah, and I think the earnings come out tomorrow. So
tomorrow.
It should be, the last time it was in June, the last couple of, and I'm hearing they're good. Well, what I'm reading is supposed to be good numbers, and we'll see if that can help.
Yeah, so if we assume that somehow buyers or sellers know something ahead of time, or really the stock chart itself knows something ahead of time, you really love to see that close today above the bottom of that daily profile at the 286.84 level. It's just giving you great bottoming signals out there, and would suggest staying along with the ride as long as you didn't overdo your exposure on the options trade.
Can I ask you one more thing?
You can ask me too.
With the oil price kicking up, should a person look at puts on maybe United or Delta or one of the airlines with the fuel costs kicking up?
So Delta, yeah. What's the what's the ticker symbol for Delta? It's not D.
DAL or UAL.
DAL. DAL. That's right. Delta Airlines. So, what we'd have to do, Ron, and we're going to go to a break here, so I'm going to ask you to hang on. First thing we'd want to do is go take a look at Delta Airlines and see if there is a positive directional correlation between light sweet crude and it. Because otherwise, if there's no real correlation there, we don't want to cloud our head with our heads are already clouded enough. Speaking for myself.
Well, I thought fuel costs are pretty significant to the airlines, and I don't know.
No, look, that's absolutely true. But we'd want to really see, is there a good directional correlation there? Because you don't know what the hedging department inside Delta Airlines has done with regard to crude oil.
Sure.
But stick around through this break. We'll come back. We'll take a look at Delta Airlines and try to figure out what it's communicating to you and I, as well as light sweet crude. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Ron, the chart that I've got up on the screen right now, the top portion is Delta Airlines, daily chart. The center portion is light sweet crude. and the current contract, the October contract, and the bottom takes a look at the 5-day average correlation, directional correlation between the two. What you really were gunning for there was to see all the bars above the zero line, and here it's really kind of a mixed. I don't know if it's 60-40, 50-50, but it doesn't seem to me like you would make your trading decisions on Delta Airlines based upon the correlation of what's going on inside of light sweet crude, and instead you would just make the. So that was really the premise of your decision, and so I'm going to say.
I was just looking at Delta and United UAL. And,
yes. So
I was just thinking that but anyway, I haven't done anything. I was just thinking like that. I thought how long will it last, and it'll have an effect on the airlines. I don't know how long it'll last.
Well, it may have an effect on the airlines. Again, you don't know what their hedging operations were like. Well, remember, there was a time period. There was a time period where Southwest Airlines was making gobs of money, and it wasn't necessarily on the operations. It was on the hedging operation inside of their company and crude oil. And so, if I'd just say go back, maybe read the MD&A of their last quarterly filing, see if there's some information in there. But what's more important, I think, is just simply you and I can go take a look at the directional correlation between light sweet crude and Delta or United Airlines. It's now United Airlines that's on the screen, and really shows the same thing out there. And it just says that, yeah, it's an important cost inside, but it's not. I think you've got to just trade the chart of United Airlines or Delta versus using the correlation of light sweet crude. That's at least what the chart patterns are communicating to me.
Thank you very much for your time. Appreciate it.
Hey, you bet. And so, listen in on the next caller, because we're going to go talk about light sweet crude. So thanks for calling in. Good to speak to you. And so let's go out to Bill in Jupiter, Florida. And Bill wants to take a look at light sweet crude. So Bill, thanks for calling. Thanks for holding. And a nice segue after taking a look at the airlines out there. So how can I help you on light sweet crude?
Well, Steve, interestingly enough, you talk about the gap in Amazon and how that, as I looked at you analyzing that chart, that gap had actually gotten filled based on Basil's indicators. Now, as I look at crude, and you've got almost a $4 gap, I'm assuming that at some point that gap will get filled. And interestingly enough, fundamentally, supposedly Saudi Arabia has 30 days supply that they can put into the market, and President Trump has agreed to go into our strategic reserve if needed as well to stabilize the price of oil. So I was just curious what your thoughts are on oil, and also if you think or at what point that gap will get filled.
So let's not answer the latter question, because that requires a crystal ball, and I ordered mine from. You know how Amazon is really great. I ordered it from Amazon. I'm still waiting for it. So, but let's use the version of the crystal ball that we can use, and that is just understanding what the chart patterns are inside of light sweet crude. And so, yes, a nice gap to the upside this morning, but to a certain extent, and yes, there's a gap there. But there's not necessarily a real price gap. Now, what the hell did Steve just say? I guess what I'm saying here, Ron, or trying to say, is if you take a look at the high on September 10th inside of light sweet crude, that was 58.76. And if you take a look at the low today in light sweet crude, that was 58.77. And so, yes, there's a gap between Friday and today. But overall, for like a huge gap that must be filled, it's not really there. So that's the first thing.
Okay.
That's the first thing that I would caution you on, because if we took a look at the weekly chart, we're going to really see the same thing. And so I don't think, and I'm not saying price can't go back down there. That's not what I'm saying. But I wouldn't use it necessarily as a gap play, as a clear gap that has formed in the marketplace. Here's what we know about light sweet crude, and we knew this weeks ago. In fact, we knew this, in essence, on the trading day of June the 4th. And that was at the price point where light sweet crude had most previously broken down was 63.14. And that's represented by the solid green line on my chart out there. And that was created by taking a look at, because it had 9 consecutive closes from the trading day of May 22nd, where each close was below the close of the bar 4 bars earlier. And when that happens, that creates that TD setup 9-count pattern out there. When light sweet crude bottomed, it was with that pattern, because it was the day following, which was June 5th. That was a lower low that qualifies as a TD setup buy pattern out here. So now price is trading between support and resistance, 63.14, 51.84. I would say if there's a close above 63.14, whether it's today or tomorrow, anytime, and then there's a second close the following day, also closes above that level, then that's telling us that there's a change in trend. And that change in trend says price would be going to its next level. Now, the swing point takes you back to April 23rd in the $67 area. But what I like to do is go take a look at the weekly chart, see if there's any other signals out here. And the other signal out here would say, look, there is, Bill, a nice big old bearish engulfing key reversal session from the week of April 26, 2019. And I would say the next resistance level would be 67.19. If there were a close above 67.19, then 74.64 would become the price target out there. So from a daily perspective, nice move, huge move, nice percentage move, but no breakout just yet. And so therefore, in order for, let's just say there was a correlation between United Airlines, Delta Airlines, and light sweet crude, what this would be telling you is, hey, don't take that trade just yet. Now, we know that it's not a great correlation, but at least you'd want to see light sweet crude breaking out. And for that, we're just simply going to use, it needs to close above 63.14, the last place where it broke down. It needs to have 2 days above that level to then get to those other areas that we just discussed. That's my crystal ball. That's the best crystal ball I've got right now. Light sweet crude. I'm not suggesting people take this trade. I don't take this trade. But right now, light sweet crude is more of a short than a long, because of that 63.14 level. Now, we'd have to go look at other, that is not the call, by the way. I'm just saying it is more of a short than it is a long until it clears that clears that hurdle. Okay?
You close above that level. Very good, Steve.
All righty?
Terrific. Thank you.
You bet. Thanks for calling. That was Bill in Jupiter, and that was light sweet crude. Now, I know Ruby has a sweet tooth, and she wants to go take a look at sugar. So if we're looking at sugar, I believe, well, I don't know what contract I have as the contract for sugar. I've got the March 2020 level out there. So, Ruby, as we go to this break, you can tell me if you're looking at something different than that, and if so, we'll go take a look at that. You are asking for an entry point in sugar, and if you take a look at that, price today is above the top of its daily profile. That was 1208, and I know you sold it, and that's okay. If you're asking where could price pull back to, I'd have to say 1208 would be the next entry point inside of the sugar contract for March of 2020. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go to our next question. It's the only question we've got in the queue, I believe. I think I've gotten to all the questions in the den. If I didn't and somebody wants me to look at something, please retype that in. That would make it easier for me. And, of course, I'd love to hear from you at 877-927-6648 or by email, steve@tfnn.com. So Lee writes in, and says, hey, Steve, can you give me your opinion on TVIX? I want to try and take advantage of today's volatility. You know, this is really a difficult instrument to trade out here. And you know, I went ahead and Lee put up the daily, weekly, monthly, you know, the normal chart patterns out here, but they're not worth a hill of beans in trading this vehicle. Really a tough vehicle to trade. If we put over the daily time frame chart, just so you get a feel for, you know, what the signals are here. The signals are here that the TVIX wants to continue to head lower. Now, the reason that I would say that is because it bypassed. It had the opportunity to form a bottom back here on September 13th, and this is the same thing. It replicates what we would look at if we looked at the spot volatility index chart out here. But what it did was it exceeded the TD setup 9-count pattern out there. So I don't have any bottoming signal or pattern inside of TVIX. Was Friday wave number 4, letter D? Yeah. Is it doing something slightly different? Yeah. But, you know, is the market getting ready to croak and crash and head to the south? Well, we would only make that statement if we saw a futures contract. And we know we don't have that. In fact, we've got a bullish reading inside of the Russell 2000 right now. Lee, if I take a look at a 30-minute time frame chart, that's what I have up here right now. TVIX formed a nice little Rhodes momentum indicator bottom signal. You can see the diagonal lines as well as you can see the bullish reversal candle back here at 11:30 in the morning on September the 13th. That then led to a TD setup 9-count top. That was on the 6 o'clock in the morning on September 16th. And that led to, in essence, a test of that TD setup top support where price had broken out. That was in a 13-14 level. There was another 9-count pattern that formed, but it wasn't an effective 9-count pattern for a buy because the low occurred on bar number 7. That doesn't work for Stevie, but price still was able to find support in that 13-14 level. So right now, you've got the TVIX trading between support at 13.14 and resistance at 13.87. How that's going to help you to trade this vehicle today, if you're looking to trade this to the long side, then at this stage, I'd say you're too late on that. And what you need to be waiting for is a failure pattern on the ES Mini. And the failure pattern would be a close below 29.7280 out there. And inside the end, and that's really, I just focus on the ES Mini. If I look at the 30-minute time frame chart for the ES Mini, I'm going to do that. Let's pull that over here. Has any key level of support been broken? And the answer is, as of today, the answer is no. That key level of support would be 29.8950 with resistance being 30.1525 out there. So I don't really have anything as a 1:45 in the afternoon, Lee, that would suggest you do anything inside of TVIX. But hopefully the information I gave to you is helpful to you in any trade that you're in or anything that you might be considering. Thanks for taking the time to write in. No other questions that I see here. So what else can I provide you with? What else can I provide you with? Oh, why take that back, Hector? Hector, the fuel injector. And he says, happy, marvelous Monday. And back at you. Does today's daily S&P candle make the hair on the back of my neck stand up, signaling a top? Well, that's an excellent question. And I don't know the answer to that. But we're going to go find out for Hector whether the hair on the back of my neck and your neck should be standing up just based upon today's patterns. So let's go take a look at it, Hector. And what Hector's noticed, he's noticed that today is a falling window. It's a gap to the downside. Now, what's really important and why Hector would be asking that question, why Lee would be asking about maybe going long the TVIX, all makes sense to me. Perfect sense. If you take a look at the S&P 500 cash index, what do we know? We know that on Thursday, this formed a TD setup 9-count pattern. The actual high in the S&P 500 now for the current move took place on Thursday. Friday was a lower high. That was a doji candle on Thursday. Pretty easy to create a bearish reversal candle, which it did. Bearish engulfing. That body of the candle on Friday engulfed the doji out there. Then you have a gap to the downside, telling us about downward pressure out there, Hector. And in lieu of having new market profiles, we would say, hey, there's a top. But our role, your role and my role, is to always understand where support is at. And support here, and taking a look at this chart, is at 29.72. On my screen right now, it says 29.7166. That's Stevie's green line, the oscillator and change line. So is the hair on the back of my neck standing up? Nope. What the market is doing is what it should do. It could be just a sideways-ish move out here for a couple days. After all, the Fed's coming out on Wednesday, I believe, around 2:30 out here, just waiting for price and Stevie's green line to catch up to each other out there. But is this like the top? The change in trend is going to require a close below support. And so you got 29.72, Stevie's green line, and 29.72 as the daily profile level out there. So, Hector, the only way, and I use that metaphor as the hair standing up on the back of my neck because price is going to go lower, is if we see a close below those levels out there. We've got a short-term topping pattern. Remember, TD setup 9-count can be a change in trend, can just be a hiccup, maybe just a few days or sideways-ish move out there. Boom, tough for Stevie to say. And right now, I think it's the latter, more than signaling anything else. Russell 2000 is saying, I'm not done headed higher. The NASDAQ is retesting. Let me re-say this. It is retesting the consolidation level that it broke out upon. Until it gets back underneath that consolidation, the chart pattern is communicating to you and I that it really wants to go tag 82.15. You're only at 78.67 right now. So the markets are, I don't see anything that has transpired today to suggest that the change in trend has taken place out there. You close below those key levels, and then it's a different story. So, Hector, thanks for writing in. Specifically with regard to the S&P 500, it's really just doing what it's supposed to be doing in the marketplace. Again, thanks for writing in. Question. XOP, let's go take a look at this. So this is in the oil and gas sector out here. So let's go take a look at this energy ETF. XOP, if I chase and buy here, where is the logical stop loss? Okay, so this thing moving higher, big volume behind it. Let me get that going on the other charts out here. First, with regard to daily profiles, you're above the daily, you're above the weekly. This says price could be targeting 32.43. You're asking me where would the stop be? So we come back from this break, we're going to try to answer that question for John in the Tiger's Den.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found the computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. Tom O'Brien will be hosting a special 60-minute live webinar Wednesday night for Gold Report subscribers titled The Next Leg Up in Gold is $1,794. Find out why. In this 60-minute webinar, Tom will be discussing how the bond market moves the gold market, where the gold demand trends are coming from, how gold outperforms fiat currencies over time, how gold trades an average of $110 billion a day in value, along with many more topics. Subscribers to the Gold Report just closed out 3 positions in the last week for profits of 28%, 35%, and 51%. Now is a great time to sign up for the Gold Report. You don't want to miss out on the next big run in gold and gold equities. Sign up now for the Gold Report by visiting the front page of TFNN.com and get ready for Wednesday's live webinar with Tom O'Brien. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. Today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we're taking a look at the Oil and Gas Exploration and Production ETF, XOP. And the question is, if one was to enter now, where would you put the stop? So on the daily chart out here, here's what we know. We know that the average true range over the last 10 trading sessions is $1.06. And so I would use the $1.06. That's just your average daily price movement, and say that your stop needs to be a Fibonacci expansion of that $1.06, a 1.272 or a 1.618. Well, the 1.272 would be $2.41. The 1.618 would be $2.78. If we enter, it's at $26.05. Let's call it $26 right now. That would say the stop would be either $23.59 or $23.22. And from a position size standpoint, you're using the stop level, either 241 or 278. And that's what you're using. You're dividing that into whatever 1% of your portfolio size is, or whatever it is you would be risking on this trade here. If you have a portfolio of 100 grand, that would be $1,000 divided by, let's say, $3, 278, and that would tell you you could go buy 300 shares. That would be your position size, so to speak, out here. So I'd say the levels would be 23.22 to 23.59. You were looking at a price point of 24.50 for your trading idea out there. So what is $26? Let me see, equal 26 minus 1.06. What does that come out to? I wish I knew. I'll tell you, it's $24.94. So yeah, that's fine, as long as you are at least below the average true range out there. That's what I would go with. And you're using below the stop, which is $24.95. So yeah, I mean, I like using the average true range and some type of Fibonacci multiplier, and then because all that's impacting is the size of our position out there. So hey, folks, thanks so much for being here. The hour is up, but stay tuned. Another extraordinary hour is next. Your favorite polar bear, David White. After that, Tom O'Brien to take it on home. Hey, I'll be doing the 9 to 10 o'clock show tomorrow again, so tune in then for, hopefully another great hour. Take care and have a magical Monday.